So the three global economies based on nominal GDP are USA, China, and Japan. So USA has the highest GDP, China has the second, Japan has the third. USA, the biggest GDP contributor is the service sector. So finance, real estate, insurance, professional, and business services, healthcare make up the US GDP. And then China, mining, construction, real estate, financial services, and retail run the Chinese economy. And growth is currently outpacing US and may overtake it based on nominal GDP in the coming years. So the economy has become more open over the last few decades, and standards of living have improved. And increased autonomy for businesses allows for greater flexibility in market prices. And foreign and domestic trade and investment have increased. Japan's strong cooperation between government and advanced technology firms have resulted in a strong manufacturing and export-oriented economy. So, four main factors for a strong economy. You want to have very high skilled workers. So that's one of the things. So to have a strong economy, you need high skilled workers. Also, you need improvements in roadways, manufacturing, factories, etc., to reduce costs and improve efficiency. You also need greater quantity and availability of natural resources to boost production capacity. So more natural resources like like uh yeah, so more natural resources is very important, and also improvements in technology to improve labor productivity. So improvements in technology to improve labor productivity. Expanding, things to consider. So you got to look at fiscal monetary policies before you expand of the country that you want to expand into, and look at trade policies. Also, the level of nationalism in the country. If most of the business is nationalized, that might be a problem. Type of government, you might want to know what type of government is to determine if the market is structured in a communist way, socialist way, market system way. So those are very important considerations for you. Also, you have to ask if your products slash services be a good cultural fit. And then also, more developed countries have more sophisticated industries. Average family income is higher, equals more purchasing power and demand. Less developed countries usually have more basic industries, lower incomes, less purchasing power and demand. So, more developed countries may be better markets to sell your products in because they have more money. Level of economic infrastructure. So usually more business opportunities in countries with better infrastructure. So better money banking system, better educational system, better transportation communication systems, energy systems provide power, etc. So how strong are the human resources, physical capital, natural resources, and technology factors? So how much government support is given for these? So that's a good question. So you want to make sure that the government is supporting all these industries more, and that's good for your business. So government support of these industries is very important. And then multinational corporations, what are they? So any company that conducts business across national boundaries, regardless of where headquarters are located. So they're also very engaged in international trade. Most successful ones consider political and cultural differences when expanding into new markets. Some are massive corporations, Exxon, Walmart, but not always. So benefits easier for large corporations overcoming trade issues. Barriers for one country may not apply to another, so it can ship product from one country instead of or shipped production to another country if needed. Easier to navigate regulatory restrictions in foreign countries. Merging with a local company in another country allows them to escape regulatory restrictions for foreign firms. Easier to deal with market shifts. So it can shift production of a product to something else if there's need and market demand. Easier to access new technology around the world, so it can lead to huge cost savings. And easier to save on labor costs, so access to cheaper labor in other countries. So if you get the other country to produce the product slash service, it's cheaper for your company. Investment styles. So there's three different types of investment styles: growth, value, and momentum investing. So Peter Lynch believes that an investor can identify great stocks long before the market does by using his intuition, intelligence, reflection, and perseverance. So stock market isn't really a gamble. So if you pick good companies, if you find good companies that you think will do well for a fair price, you can make a lot of money. So the key is find good companies at fair prices and invest in them. So your group project could determine if the company you have researched is a good company and maybe a good investment. You can lose a lot of money in a very short time, but it takes a long time to make money. You have to research a company before you put your money on it. So also when you invest in the stock market, you have to diversify. So diversify across industries. So own companies from different industries. That's important. So like own companies from railroads, own companies from banks, own companies from technology, own companies from the automobile industry, own companies from electricity industry. So like buy stock in companies from many different industries. Just in case one industry goes bankrupt, you have other industries. And the buying stocks and utility companies is good as it gives a high dividend. So dividends are good because they are cash payouts every 3 months for your investment. Just because a stock has gone down does not mean it can't go any lower. You should not buy a stock just because it's cheap. So the stock price could keep going down. It may be down right now, but it may just keep going down. So you want a company that has high rates. You you want to determine if the company has a high rate of earnings and sales growth and a low price to earnings ratio and trustworthy management. So Warren Buffett said if past history was all there was to the game, the richest people would be librarians. So that would be, he said that. So if history just repeated itself, the um, librarians were the richest people. So value investors buy businesses instead of buy businesses instead of thinking of it as a stock. So you should evaluate the business rather than the stock. So the business should generate high and increasing cash flow. The business should have a high return on equity of above 15%. So good questions to ask for your group project. So group project questions. So is the business simple and understandable? Does it have a consistent operating history? Does it have favorable long-term prospects? Is the management rational? Is the management honest with its shareholders? Ask these questions when you analyze your company for the group project. So, with a few exceptions, when a manager with a reputation for brilliance tackles a business with a reputation for bad fundamentals, it is the reputation of the business that remains intact. So, focus on return on equity, not earnings per share. So, focus on return on equity and high profit margins. So focus on high return on equity and high profit margins. So ask these questions also. Ask, what is the value of the business? Can it be bought at a discount to its value? And then Buffett believes that fixing an inherent fundamental value to a stock is possible. That can be compared with the market price. If the market price is a discount, the stock is a buy. So this person here, he says he rather invest in a stock that increases in price because it may keep increasing in price due to momentum. So then investing in a decreasing stock price. So that's what he said. So he says, yeah, so he believes in Newton's first law of motion. Objects in motion tend to stay in motion until another force intervenes. So he's interested in stocks with strong upward price momentum. So it just keeps going up. So which style of investing is best? So growth stocks will outperform value stocks for a time, then the opposite occurs. Over time, value stocks have offered somewhat higher returns than growth stocks. So it takes discipline, focus, intelligence, hard work, and so discipline, focus, intelligence, and hard work are key to investing.